All right, so I am recording this morning, so. All right, so let's see here. We worked on chapter 6. How were the exercises there in 6? We had different questions about, let's see, 6A. We had 6A on page 610 talked about which of the following taxpayers qualify to claim the credit for dependent care expenses. Did anybody have any questions on that one or wonder what which ones applied? And child care, pretty straightforward. That one's not too bad. Had a little worksheet where you got to do the calculation there. And everybody kind of understands how the numbers are in there based on, you know, we had our friends the Boyds, and the fact that they had an amount in box 10 on Tim's W-2 for $2,000. So we had to kind of back that out, if you will. Okay. So they had from Little Red Riding Hood daycare, they had $6,000, but the $2,000, since they had 2, we could have been at $6,000. But what happens with that starting in that calculation of the credit? We backed the $2,000 out, so we started at $4,000. So on the little form that you had to do, the 2441. Line 3 there, instead of using the $6,000 that you get for 2 or more qualifying persons, you started at $4,000 for your calculation. Okay.
Why did we drop it $2,000 again? Was it the employer that gave me $2,000, right?
Yep, they had that in box 10. Yep, in box 10. So, okay. All right, so we had that. The rest of the chapter had a lot to do with the education credits, talking about which one applies. And we had my exercise here on page 627. We had exercise 6C talked about if you determine which of the following taxpayers may claim an education credit. Did everybody kind of get who gets to claim it? Number 4?
Yeah, I had a question mark on my book, so I must have.
Okay, so we have Sharon Seaton's son, Caleb, who's 19, unmarried college student. He earned $7,500 from a part-time job and paid qualified expenses of $12,578, so that probably showed up on his 1098-T. Sharon provided more than half of Caleb's support and plans to claim him as a dependent. Cheryl has taxable income is $45,000.
So Sharon can, because he's a dependent.
Yep.
Then on 4, except Sharon's taxable. I didn't understand that question.
Well, basically it's saying that Sharon has taxable income without Caleb's dependency exemption is 0. So she has no taxable income, okay? So our question is may she claim the education credit? Yes, but what does she only get?
Only up to what she owes, so it's 0, right?
0 there, but on the American Opportunity, it has 2 parts, remember? Up to 40% can be refundable.
So it's only the refundable portion?
Yep, so she only gets that $1,000 refundable portion. So yes, she can claim it, but it's kind of when you have no taxable income, you know, you have to kind of understand that the Pac-Man had nothing to eat. So it was just the Energizer Bunny part, and she got the $1,000 refundable. Okay.
Which is better than the non-refundable.
The lifetime learning. Mm-hmm. Yep. Because if he was, say he was in his 5th year of college, you know, he'd already taken the first 4 years, he would only have the lifetime learning, so she would have gotten nothing.
And you can't do either one. Oh, because, she would have got nothing because she didn't have any,
Yep, no taxable
No
income and no
taxable
tax bill.
no tax bill.
Yep, so she had nothing to on that. So that might be the case where then you have to start to weigh, you know, is it really worth putting him on the return because of, you know, she not getting a credit for his college, depending what his income and his refund may be if you split them, what the, how his FAFSA might work, things like that. So.
But FAFSA is still on your parents' income anyway until you're 24.
Not if you've totally separated from your parents.
Yeah, you-
That's not what happened with my daughter. She was 19 and she was in her own house, paying her own bills.
Mm-hmm.
FAFSA would not allow her to do it herself. They still asked my, we
Really?
didn't even live in the same street. Matter of fact, I was in Wheatfield, she's in North Tonawanda. And they would not allow her to go under only her income. They had to ask mine. But she was 19. We had gotten the house.
And you didn't claim her as a dependent?
No, I did not.
Because
she didn't live with me. She couldn't.
That's strange. I've never heard of them doing that. I'd have to ask somebody that
So
does
could I
college
claim her
stuff.
as a dependent that year, then? She didn't live with me. She
Well,
was on her own. She was emancipated.
yeah, if she's emancipated, my understanding is that it's only their income. So,
And I didn't
but I'd
put
have
her
to ask somebody
dependent
that
on
does
my-
college planning. So,
Yeah. Maybe it was just in that year.
but yeah, that would be a good question for college planning. That's always my understanding because I
had
always
somebody
ask
do
questions.
it. I paid
So.
somebody to.
Okay, so 6D, we had some qualifying education. Anybody have any questions about what qualifies? You know, what it boils down to is, you know, qualified tuition expenses really just boil down to the tuition. You know, room and board's not in there, extracurriculars not in there. You know, there's some gray areas when you get into specific supplies or equipment for their major area of study. You know, you have to be very definitive on it. So, you know, that's where you can kind of get into different things that
So
may
if you were in the
qualify.
medical field and you had to purchase or pay for some of the supplies for dissections and all that. To
Yeah.
dissect cadavers and things like that,
Mhm.
all that stuff.
Yeah, because that's, you know,
That would be.
in order
part
to
of it.
complete your area of study, yes.
Mhm.
Yeah, so I suppose stethoscope or whatever they required of them, so. Okay. All right, and that's about it. There's a few other exercises there, kind of getting you to understand the credit limits, you know, how that is calculated. Again, a lot of it just boils down to understanding that, you know, the American Opportunity has a non-refundable and refundable portion, and the lifetime learning is strictly non-refundable. And that, you know, based on the income and other things that may come into play, that your limitations basically are based on your tax bill per se. And then also understanding the phase out, okay? A little bit of that comes into play when somebody, you know, with the credit, if their income's higher, they phase out, you know, the American Opportunity, you know, it starts at 160 for a married filing joint. Lifetime learning starts at 112, okay? So, you know, some people, even in that fifth year, it's a very minimal credit if their income's in excess of 112,000, because not only do they not get the refundable portion from the American Opportunity, but also if their income's high, they may not even get the maximum on the lifetime learning because it'll start to fade away and actually disappears at 132,000. So, okay. And they have all that when you look at the forms and you know, like on the one that you did for the Boyds there, when you look at part 2, it lists in there in each section. It talks about, throws a number out there, enter a certain number if married filing joint, or enter a certain number, you know, like the 180,000 and the 132. Those are the total phase outs, where basically it says, if your income's over this, no credit. Okay. All right. Due diligence, always make sure that that part 3 I know in the software, that's where it takes it right to. You really don't see part 1 and part 2. It's kind of like they're doing it backwards. But, you know, having that due diligence done and like I said, you know, using that F7 and using that diary and looking in there and see if somebody's put a note and says, you know, Thomas is in grad school or Olivia's used 3 years or 4th year or whatever, so that you understand that because of the way the tuition in the school year falls. Okay. All right, so let's go through the quiz on 6 and we'll see if anything else comes up. Like I said, on the 1098Ts, you make sure you do your due diligence if that number is only listed in box 2 for amounts billed, because that's kind of vague. Did you talk to your daughter and say, hey, you guys do those things wrong? So.
Yeah, and that's what my son last year, why the IRS sent the letter saying, well, show us that he paid it because his form from the college only showed what was billed. So.
And like I said, you know, with a lot of my clients, they've gotten used to the fact that they will come in with the statement of student accounts that shows the in and the outs, you know, that is almost looks like a bank statement that is much more descriptive than just using that 1098T.
Yeah.
So.
That's what, yeah, when we got the letter saying, well, and then we just printed off the January statement showing they received the money and
yep,
everything was fine. But
yeah.
It's still a little unnerving letter from the IRS.
Yeah, yeah.
So when you say do your due diligence, there's not a form for that,
You just have to know to ask.
Yes.
Yep, you really have to know to ask. So, all right. So on page 658. All right, Mary Ann, why don't you start out with number 1 on the quiz on chapter 6.
What statement is true concerning Joe, who is in the 25% tax bracket? C, a $50 credit saves Joe the same in taxes as a $200 deduction.
Okay, so kind of went back to that difference between a deduction and a credit. Okay.
2, what statement is false concerning a refundable credit? C, cannot reduce the tax liability below 0.
Yep, like I said, Pac-Man. Once it's done eating, it's done.
What statement is true concerning the foreign tax credit? C, allows the taxpayer to offset taxable income on which foreign tax was paid.
Exactly. Okay. I know D's in there. It says requires the filing of form 1116. You know, that could be right, but if we had to pick the most right, it would be C. You do, you know, foreign tax credit, you could put it on the 1116, but does not require it. Okay. Remember, we have that simplified method at the top, or we can just put it directly on that line. All right. All right. 4.
In order to claim the dependent care credit, which one of the forms listed below must be filed? B, form 2441.
Yep. Yep. You don't have to have them on the EIC. So. All
Which of
right.
the following statement is false concerning dependent care credit? D, preschool education such as nursery school is not deductible for dependent care.
Yeah, I've always said now after seeing, I'm thankful that my wife was able to stay home at that stage with our kids, because it would have just been another college tuition bill for some of these preschools. So, all right.
6, what information is not used in form 2441, part 1, to complete the form correctly? D, qualifying child's name.
Yep. Yep.
I think that would be the first thing.
Yeah. I know.
Because it's
Well-
When I first did that, it's like, okay.
Yeah. And the form's odd because you're thinking, well, it's not doing anything. And then until you get the kids really in there and see what you spent out of pocket, then the form starts to trigger. So.
What is true concerning the dollar limit for work-related expenses and the calculation of the child and dependent care credit? It's $3,000 for one child, which is B, and $6,000 for 2 or more are the dollar limits on work-related expenses.
Yep. And always remember too, just because it's 3 and 6, you know, it's one of those proportional things. If there's something that comes from the box 10, that number is reduced. It's not reducing what you paid before you get to that. It's reducing in that calculation.
And 6,000 is for 2 or more. So even if you have 5 kids, it's still just the 6th grade.
Mm-hmm. Yeah. And that's where a lot of people, you know, when they come in the first time that they do taxes and they have dependent care, they think, you know, they I don't know if it's rumor mill or whatever, but they have this understanding they think they're getting a dollar for dollar deduction or credit for what they pay for childcare. And when you look at it, you know, the way the calculation works, and then that, you know, 20 to 35% based on your income, and then all that, by the time it's all said and done, it's pretty small credit, but it is a credit that eats up your tax bill. So it does help, but it's not a dollar for dollar deduction. Okay. All right, number 8.
Name the 2 education credits available to the taxpayer and write the phased out income amounts for each. American Opportunity Credit, $180,000 for married filing joint, $90,000 for single head of household and qualifying widower.
Mm-hmm.
And a lifetime learning credit, $132,000 married filing joint, $66,000 for single head of household and qualifying.
Yep, exactly. Good. Number 9.
Name the education credit available only for the first 4 years of post-secondary education, American Opportunity Credit.
Okay.
10, the max amount of American Opportunity Credit is $2,500 per year per student.
Uh-huh. And the maximum amount for the lifetime learning credit?
Oops, I'm sorry. The next is $2,000 per year per return.
Yep. And that's a big thing. Like I said, that's where that credit, you know, once you know, that's why it's so important to make sure that you're doing that American Opportunity correct with that first 4 years due diligence, because it is a big credit. Okay. That, you know, your kids have stopped being worth anything on your return when they turn 17, and now they might be worth something again. Okay. Remember in 18 though, that they might be worth $500 credit, because there's that family credit that they've added. It's kind of for those dependents that are over the age of 17 that are no longer child tax credit, but now they're worth $500 credit. Again, non-refundable credit that eats up the tax bill. So that's something for 18 that's new. Okay.
For 18, what are the tax brackets? Did they change? You know, they...
Mm-hmm. Mm-hmm. Not only did they change the percentages or the tax rates, they also changed some of the ranges. So
Is that set in stone right now, or is it still?
Sounds like it is, but till I get the software and see it actually work, and know that we can start filing, which they've already given us a heads up that there's going to be a delay of a couple weeks at least, just to get all the forms and stuff to work properly, and obviously the software developers have to figure out how all these postcards are going to work, because like I said, it's just a lot of little half sheets of paper. I would hope they develop it that it compacts it a little bit. But yeah, I mean, you have one postcard that's got 5 lines on it that's this little teeny thing across the top. So that's it, is what it is. So, all right, we just have to play by the rules, I guess. And let's see, number 11 is in 2017, Michael Cook paid his educational expenses at a community college where he completed his freshman year and began his sophomore year. His father, John Cook, provides more than half of his support for his son and claims an exemption for him on his tax return. Which of the following is correct? That would be B. John is eligible to take the American Opportunity Credit on his 2017 return. Okay? And like I said, that's where you got to do that due diligence, because especially that 4th year, because what happens is, the last year of the 4th year of college, the tuition's probably been billed in the previous tax year. And if they're on in a 5-year program or they're going to grad school, it's going to look like they were in school the whole year, but it's probably just a lifetime learning credit for them because the American Opportunity has been used the previous 4 years. Okay. All right. And then doesn't ask much on the state side, but we talked about that with the IT 272. It doesn't really say much in the quizzes or anything, but remember to do that one. Like I said, that's one of those forms that on the tree, it's kind of out of sight, out of mind down there at the bottom. And once you have qualifying tuition expenses, you can do the state. It could be up to a $400 refundable credit on the state. So it's a good one. And also do the second page of the IT 272 has those 2 little boxes. Because sometimes if somebody's a higher income and they itemize a lot and they pay high tuition cost, it's better for them to use it as an itemized deduction on the state. Okay, and what I mean by that, let me just show you real quick here. I don't know if you've picked up on this. There's my family, the Boyds. Okay. On the New York form down here, we have standard deduction. Okay. The itemized, if you go in there, you can always take a look at it and see what's happening on the state. If I go in there and hit F9, okay, and I see that there's my itemized deduction. This is like the Schedule A for the federal return. Okay. I can see I have my little form there, and you can see on there that we can have where we can do college tuition itemized deduction line 15. All right. Even though we adjust out some of the things from the federal to the state up top, we can add college tuition itemized deduction, so it's added on. It's not, you know, it's not a partial. It's not on the federal. Okay, you don't get to itemize. We're going to talk when we do adjustments to income. We'll talk about the tuition and fees deduction. On the federal, it's an adjustment to income, but on the state, it can be an itemized deduction. Okay, so like I said, that's why page 2 of the IT 272 is so important, because checking those two boxes to see which one weighs better. And like I said, I see it most often when you have somebody that itemizes a lot and has high college tuition, out-of-pocket qualified expenses, that sometimes it's better to itemize than that $400 refundable credit.
Is that, if you had like 2 kids in school, is that total?
Mm-hmm. Mm-hmm. So, you know, it may be, like I said, better. And that's too, when we do the adjustments to income, some of the problems that we do, we'll kind of see that with the adjustment, because sometimes even forgetting about the lifetime learning and taking it over to the adjustment, because the lifetime learning is a credit, so it's eating up your tax bill. Sometimes doing an adjustment to income is better because you're lowering your tax bill more than what the credit is eating up on the other side. Okay, and we'll see how that works. All right. All right. Okay. How do we do on the problems? Okay.
Our computer problems?
Yes. How do we do? Let's do together. I think it's a good one. The turns. All right. Problem 6.3. We got Michael and Julia. I guess Julia. Okay. All right. How'd you guys do on that one? Okay. You know, 6.5 was pretty straightforward. The Fowlers, the big thing they wanted you to realize is that Bob and Julie are both doing what?
Wait, which one are you on there?
Well, we're going to go through, we're going to do 6.3 here, but the one on 6.4, Bob and Julie Fowler, it starts on page 616 in your workbook. That one, the big thing that they wanted you to take away is what? Bob and Julie's, their tuition is for
Master's. So
graduate school.
Graduate school, so it's after the 4 years.
Yep, and a lifetime learning, as we learned in the quiz, how many, that $2,000 credit, is it each of them gets that $2,000, or is it just per the return?
Per return.
Yeah, they wanted to really.
We're doing joint.
Exactly. So that's the big thing they wanted you to walk away from, that is to realize even though there was 2 tuition statements there, that credit is limited to that $2,000 per return, not like the American Opportunity that is per student. Okay, so make sure that that one is. All right, so let's take a look at Mike and Julia Turner. U-turn. Michael U-turn. Isn't he Michael U-turn? Yes, Mike U-turn. All right. Okay. All right, so we're going to put that one in there. Okay, and let's see here. We have Mike Always like this one. U-turn. Okay.
So he doesn't come up with a middle initial.
What's that?
They didn't give Julia a middle initial.
That's because she has such a unique first name. The only thing would have been better is if she kept her maiden name, which was Jem, Julia Jem. Okay. But she decided to take her married name and became a U-turn. So, all right. We got Grove Street in Angola. All right. We have, of course, you have to do U-turn as your email. How could you not? Just begs to be that, doesn't it? Okay. And we have their birth dates. And we have their occupations. We have a truck driver. And we have a baker. They're doing married filing joint. We have some kiddos. We have Daniel. So first thing we should probably think about is we're filling this out. A lot of times this is where, you know, I will even at this point ask them, you know, looking at the age of 11, we're under 13. So my question may be, is there any dependent or child care expenses, you know, even for after school, so that either one of you could work? You know, that's a question that would come up. If they say yes, you know, then while I'm doing some of this, I can say to them, do you have that information with you? And then they can look for it while I'm finishing the main info sheet, and I can come back to it later. But, you know, go ahead and check it because what has it done? It's created that 2441, so it reminds me that there is something for them, okay? And we have Darlene turn. All right. And she is that age too. And, you know, she's almost, when you see that 3, 4, 5-year-old, sometimes you have to ask about preschool. Okay. And again, I always tell you, you know, check that EIC box, okay? All right. Now, Grace Peters. If we look at our bullet point here, they filed a 1040A last year. What's that tell us?
No itemized.
No itemized. Good. Okay. Talks about they want their deposit in the checking account. They'll send a check if they owe any taxes. We have some information that we were just starting on there that we're going to use to complete their return. Neither Mike or Julie was a full-time student, and neither received a distribution. Remember, that's that one that, you know, you've been wondering why they keep saying that on every problem. That's in case they do that contribution. We're going to talk about it today, that savers or that retirement credit. EIC is not disallowed. They had health insurance the entire year, so we can go to our ACA worksheet. And, whoops, what did I miss on my? Okay. My box is in the way. So they had health insurance, so we can check no and no in those first 2 boxes and check behind each one of the people we have on the return so far. The 4 of them have health insurance. Then we have Grace, Julia's mother, okay? Grace receives a small pension of $2,400 a year, plus her Social Security of $91.92. She gives her family $400 a month toward her support. She deposits her pension into a savings account. She spent $200 at craft shows. It's nice to hear not all old people that are in the textbook are going to bingo. You know, we have all these habitual gamblers. It's nice to hear somebody spending their time at the craft shows, okay? Grace has $15,000 in her savings account. Use the worksheet included in the forms to see if she qualifies as a dependent. So, okay, so over a couple pages back, we got the little worksheet. First line, it says on there, enter the total funds belonging to the person you supported, including income received and the amounts borrowed during the year plus any amount in savings and other accounts at the beginning of the year. Okay? So what does she have?
I have 26,592.
Okay, and how did you get that number?
I added the 2,400 pension, Social Security, and her savings.
Mm-hmm.
And it's savings.
Okay, so what'd you get, 26?
I got 26,592. I
Okay.
don't know if that's correct.
All right, okay, that's all right. Enter amount on line 1 that was used for the person's support. What does she give?
4,800 a year.
Yeah, because she gives.
Said 400 a month.
Mm-hmm. Okay. What was used for other purposes?
I ended them up at 6,792.
Okay, so where do we come up with that number?
Okay, I added other. Okay, where did I add them all up? Show it. It was.
But just for her, don't get into the stuff at the bottom. Just kind of do the paragraph. So what's really the only thing that she used for other stuff?
I think I subtracted. I came up with that at the very end. I went to 4 first, the savings, so this way I was able to take that out.
Okay,
But
so
then I knew that I was only working with the Social Security and the pension.
okay, but where does she deposits her pension into a savings account?
And then, right, and then she takes the 2,400 and she puts it into the savings account.
Okay, so that gives her at the end of the year, her savings has how much in it?
27,400. She had 15,000. Is that what you said?
So 15,000.
Right.
And it says she deposited her pension into her savings account.
Which is 2,400.
So that's 17,000.
17,400.
Okay, so that's what you got for line 4.
No, line 4 I only get 15,000.
Okay, but remember she deposited.
So this is where I went wrong then.
Yep.
Okay.
She deposited in there.
So 4 should be the 15,000
Mm-hmm.
plus the 2,400.
Yep.
That should actually say 17,400.
Yeah, because did she put any other money in there anywhere?
No.
Okay, so we only know that she started with 15 and she puts her pension in there.
So
Okay.
6792 is not going to be incorrect.
Okay. Okay. So basically what happens? What does she use for other things? We know that she spends what?
Well, she spent 200 at a craft show, but
Okay.
I didn't include that in any of my figures.
Okay. Well, you know, that's kind of other purposes though. It's
I
no
just
different than the
included
bingo.
everything.
Mm-hmm.
So actually what I did was I did that and then I subtracted it from the 26,592 to come up with 4392 now. Instead of the 67 would be 4392.
Yep, 4392 in there. Okay, so that gets us to the 26,592. And how did where do we get that 4392 really from? Really, it's her.
I just subtracted it from it, which is probably not the correct way of getting it.
Okay, well, let's look at where we got it. So we have 9192 is her Social Security because we know that the pension went into her savings, correct?
Correct.
Okay, so we have that Social Security now. What do we do with it? Well, 4,800
comes off of it because that was her support.
Mm-hmm. Yep. Okay, and that gets us what? 4392.
4392.
Yeah, so it doesn't really contain the $200. Okay, that's something that may come up later.
2,400 plus that.
Yep.
To come up with the 60-some. Okay.
Yep. Okay.
Instead of putting it into the savings.
All right, now we're going into some expenses for the entire household. Okay, so on that one we had rent $1,200 a month.
That's 14,400 a year.
Yeah, 14,400. We in agreement so far, Jim? Are you checking our work?
I'm working on it.
Okay. We had food of $300 per week.
Well, wait, you had utilities first. Oh, no.
Food expenses, right? So we had $300 a week.
So it came up to 15,600?
Yeah, so they pay more for their food than they do their rent.
Well, the growing family.
Okay.
Maybe they're Italians by heart.
All right. We had utilities, 509 per month.
6108?
Okay, we had total amount of repairs.
I didn't see any.
I don't see anything there on that one either. Okay, and total of other expenses.
Have any other expenses?
Okay,
That's where I almost wanted to put the 200 for craft shows, but that's just.
but this is just the family, so.
The family, so I didn't put anything.
Yep, didn't really have anything there. Okay, but what could we put in there? What other expenses did they have? Family entertainment?
But the family entertainment, I thought, goes into another area.
Well, it does her portion because we back it out.
So you put it in there and then put it down there?
Well, because we're doing expenses for her. Yep.
Oh, so should we put it in there? That's allowed?
Mm-hmm.
Ah, so we can put the 1,500 there, huh?
Mm-hmm. Okay, and then what do we have for total there? Oops.
So now it's gonna be addition, which is, that'll be better to do that. You get 37,608?
Yep. All right. Okay, so we have that. Okay. All right. Then we have to do, this is stuff for Grace, okay, or Grandma, or whatever you want to call her. Okay.
So now my figures will be wrong.
Yep, so we divide,
That by 5.
okay. All right. Oops. You got we're going to call it 7522. All right. All right. Do we have clothing expenses for her? 547. Okay. She's not going to school. Medical, do we have anything for her?
Yes.
2 things, right?
Yes, so that'd be 1,010.
Yep, 1,010.
Okay.
Mm-hmm.
Yeah.
And recreation, her portion of it, it's 1,500, so she had 300, right?
Right.
Okay. And other expenses, what was the other expenses? Put the 200 in there for the craft show?
You know, I didn't, and I took it out.
Nope, I put it in there. Okay.
Why can't you put that in there?
So
That's just pleasure.
we have I have 95.79. Okay. And we divide that by half on the next step. So we get 47.90, we're going to call it. Okay. And then we got to enter the amount from line 2. All right. Which up there is how much?
4,800.
Uh-huh. Okay. So is line 21 more than line 20?
Yes.
Yes. Okay. But for a qualifying child, all right. Okay. So she does by what?
$10, right?
Mm-hmm.
Wait, she does mean it?
She's at 4,800. Her portion is 47.90. So by $10.
By $10 she meets it?
Is line 21 more than line 20?
Yes. And it says
Okay.
you don't meet this.
Yep, you don't meet the sport test for this person. I'm sorry. Yes, you don't meet by $10.
By $10.
Mhm.
So even though I missed my figure, she still didn't meet it at least.
Mhm.
She didn't meet it when I did it, my figures too. Why did you put the extra 200 for the craft show? That just came out of her pocket of what of her other expenses that we already said for other things up here.
Yeah, but I would put it in there. So, Yep. So, all right.
So we want to get that figure as big as
Oh,
possible.
excuse me 1 second. Hold on. Hello? Where's the work most often as far as somebody being able to claim mom or dad is if mom is the surviving spouse and she never really worked. So she's maybe got a beneficiary on a pension and her social security is minimal. Okay, and then she has medical needs. So that's where it is a true dependent. Now, if mom worked and or dad had a pension that the survivor beneficiary is basically his payments just keep going, then chances are she's not going to qualify. So, okay, so.
That was my line of thinking, right?
Yeah, yep.
So you can still use it. It's surprising.
Yep. Okay, so we have, let's see, where were we at? We did, so we decided no, so we can't put Grace on there. All right. Very close, but I would say no, okay. We have, let's see here. So, let's see, did I finish my main info sheet here? Oh, nope, I got to get New York in there. Okay. And you get the bank information. I forgot to put that in. Everybody in the workbook seems to bank at M&T.
I still have my little exclamation point for main infos because I never filled out the self-selecting practitioner PINs.
Yeah, don't worry about that. That's a default when you're actually in there. So.
And also that I never check off if I see the driver's license and what that was.
Yeah, and again, you know, we just don't provide that information in here. So.
Right.
And then always make sure that you're still doing the prepare information, because I want you to get used to, if they have something for due diligence, that it is on there, that it triggers it. Okay.
I just don't put an EIN number in there.
Yeah, that's fine.
Okay.
So, all right, so we have that. Now let's get their W-2s in there. And again, navigating wise, like I said, I just use the tree on the left because there's always a blank W-2 there.
There is? I never see it, so I was typing it.
So, and we have
You never
that.
see yours either? When does it pop up?
Usually as soon as you start open a return, there'll be a W-2 on there.
Okay, I'm gonna
So,
have to pay more attention because I don't see it.
so we got doggy, whoops, done delivery, whatever that is. Okay. All right, and again, you know, the fact that we know from talking to them when we put the two dependents on there that we had the dependent care. It's always a good idea while you're doing the W-2s to keep an eye on box 10, because sometimes it sneaks in there and you don't see it. Okay. And we had the New York tax for that one. Okay, and the state withholding. All right. And like I said, if I need another W-2, I like to go up to the white tabs just above your W-2. You got the first one's add a form, the second one's copy. Yep, just makes another one for you there. And then make sure that you change it to spouse, because this one is for Julia. She's working at Donuts Unlimited. Anybody ever been to Peace, Love, and Donuts?
No.
It's over there by the, on Transit and Worley by the movie theater. I gotta take my,
Better than Paula's?
no.
Oh, okay.
I would say no, but my grandson loves it because it's kind of make your own donuts.
Oh.
And they have one that's called Magically Delicious. And it's a little donut about this big, and it's got white frosting, and then they put the marshmallows from Lucky Charms on it. Yes, so. And then we get to sit and watch him bounce off the walls for the next 2 hours. So. Exactly. Then once, you know, the sugar comes down, I guess. Yes, I do send him home, so. Being a good grandparent, isn't that what you're supposed to do? Okay. Just want to make sure, some of this grandparent stuff's new to me. I want to make sure I'm playing by the rules.
Well, our time to send them home on the sugar fund, so you don't take care of it.
Yeah. Yeah, well, we had done that, and because he had spent the night with us, and he had that, and a Fruity Pebbles donut, and s'mores donut, and a dirt donut with a little gummy worm on it. So after those 4 donuts, and he ran around for a while, and Mom and Dad came, and he fell asleep on the couch. I guess he crashed early. Usually he's like the rest of us. He just falls asleep during the Bills game.
I never put the dash. Put the dash in there?
You can. So, all right, so we have that. We have our W-2s all cleaned up. And why do I have red on this? Oh, I forgot to put in Julia's Social Security number. I got so excited about her name, I forgot to put it in. I'm so excited about Michael U-Turn's name. Okay, so got the W-2s in there. So what's really the only thing I have left?
Yeah.
Okay.
The schedule EIC was already checked off there, which we didn't not even go into it. So it automatically filled that in for us.
What's that?
The earned income credit. Because you already have a blue thing checked off on yours, but we never went into that form yet.
Nope, not yet. So we'll kind of do a worksheet. So let's do the Daisy Daycare. So we go to our 2441. We have Daisy Daycare nurse. Isn't that redundant? Okay. Nursery. Okay. And we're not going to fit that. So we have that. We have 123 Daisy Lane. And we have that in Amherst. We have an EIN number for them. Okay, no dashes there. Like we've talked about, if it's a church, we might put tax exempt there. If it's the old lady next door, she might not want to give us her Social Security number for privacy, but we can put see page 2 and then put the explanation at the bottom of that one. Okay, but it's best because the IRS is going to do what? Question who you paid it to, because that person's got to do what? Claim it as income. So, yep. So we have a total of $1,600 that they paid. All right, and we go down and we look at Daniel and Darlene. We have qualified expenses for Danny, as they put on here, $1,200 and $400 for Darlene. Okay. So we have $1,600. So we're good there. Okay. All right. Okay. Okay, so we have that one. And then if we go over, Mary Ann was, as she was pointing out there, first thing we got to do is a little due diligence to clean up here. If we go to 1040 page 1, I got a middle box. What did we say they filed last year? Yep, so they did not itemize, so we can say no there. The next one, it shows a 1040 worksheet 3. Okay, and what's that question at the top basically say there? Asking if they had the child tax credit disallowed.
And it did not say that.
Yep, so that was a no. 1040 worksheet 3. Yep, okay. And then our next due diligence, and this is the important one, okay, earned income credit worksheet. First question that it's asking us to fill in, most of the other stuff is there, okay. You know, if you look at the first question, married filing separate, well, it's no, okay, because we did married filing joint on our main info. But the second question is asking, does the taxpayer and the spouse have a Social Security number? Yes, okay. Was the taxpayer a non-resident alien for any part of the year? No. And the last question on question 6, it says, could the taxpayer be a qualifying child of another person? That would be no, okay? Now, this is a big thing where we have our little worksheet. We've done some of these in the exercises when we did it in the textbook. But for Daniel, I am assuming at the age of 11, he is unmarried, okay? And we always have to ask, I mean, granted, the last names are the same, but we have to make sure that they lived with them for at least half of the year. And then we ask if anybody else can claim them for the EIC, and we'll put no on that. So we can do yes, yes, and no for each of them, okay? And then the other one is part of that test that we have, those tests that we have to meet. Again, it's not multiple choice. You only meet one. You have to meet them all. And this one says, does the qualifying child have a social security number? And we can say yes on both of those. Okay. In the middle there, there's a little thing that says, if you took the EIC last year, was it a reduced or disallowed? And there was a bullet point that said no on that. Okay. So that's really our EIC worksheet. All right. So really the only thing that it leaves for us is, and I'll let you guys always do those, that due diligence on the 8867, all your things that you have to do. One that I will point out that sometimes is always good to do is that question 5 on 8867, page 1. There's a little section there that says, did you satisfy the record retention requirement? And you could say 8867, page 1.
Yes.
There's that little thing that's right here that says, did you
Satisfy the record?
Yep, retention. We can say yes. And the one thing we can put down there is what did we get that showed mom and dad's name, their address? What did we get from them?
Yeah.
W-2.
Well, that doesn't show the kids' names.
Oh, that shows.
So what's right there?
They had the daycare.
Yeah, for daycare. So, you can just put daycare standard. All right, so you can type that right in there. And that would be something if it's a new client that may meet your due diligence for you to scan and put on record electronically. And again, we'll kind of show you that as we get into the office and show you how those work. Okay. All right. Okay.
I also had the 8812, page 1 and 2.
Okay. The additional child tax credit
It came up on that.
with red.
Well, it had it on my left side, so I went into it. I'm not supposed to.
Was it red or was it just?
I don't remember, no.
Okay. The 8812 is there. What is the 8812?
It's additional.
Okay. So let's go look at 1040 page 2 and kind of see how this all worked out for us. Okay. All right. So if we start at the top, we got their taxable income and their adjusted gross income. We had their deductions and exemptions. Okay. So as we go down here and we head down the 1040 page 2. Sure.
If I accidentally duplicated my W-2, how do I just delete it?
Which one's that?
I did 2 for the guy at the doggy daycare, so it's got the income.
Okay. Just whatever one you want to get up. See the little tab up there? It says remove. Yep.
Okay,
Okay. So if we go to the 1040 page 2, our income came over. We get to subtract standard deduction and exemption. Again, that's 17. 18, you're only going to have the standard deduction. But we have our taxable income and their tax. Here's our non-refundable credits, especially the ones that we've talked about so far. We got our child care and,
That's the 8812.
okay, but why does the 8812 get triggered? What happened here? Is that the full child credit? 1826?
Yeah.
Okay. 8812 because now there's leftover. Because what does this number and this number, what happened? Our credits are non-refundable, or our Pac-Man credits ate our tax bill and left what? Zero. Okay. So the 8812 gives us the calculation. Whoop. Down below, we have their tax withheld. They have little earned income credits. And what else? The additional child tax credit. Okay, that's where that 8812 gets triggered. Okay? See how that worked?
So was mine just checked off and I did not fill in it? I know I went in there and looked at it because I saw it.
But it was already checked off because it met everything.
I don't see, is yours checked off?
Yep. Yeah, very rarely
I
does
see.
it show up as red unless something else was done
Okay.
out of the ordinary. Okay? So that's where that additional child tax credit, so that's where their refund then becomes $5,091. Okay? Like I told the class the other night, all of a sudden, if I'm advising this person, what am I starting to talk to them about if it's the case that they have a family structure that they have? And they got mom living with them, what could they do? So basically what's most of their refund is their withholding, right? Change their withholding so they have it during the year and not wait for it at the end of the year. Especially if you got mom living with you and you're not getting a claim.
The only thing is that this is sometimes what people bank on, that's why they always come.
Well, you have to do is my next question is, unless you bank on it, and a lot of people, what do they do with their refund? Pays what? Property tax.
Probably property taxes, right, so this is their savings way.
Yeah.
Because then if they have it ahead of time, then they can't do it.
And sometimes they don't have it at the end.
Yeah.
A lot of people can't save.
Yeah, I worked with somebody yesterday that last year had owed 5,000 and they were doing very well in their withholding, and she was in to kind of see where they were at, and we're doing better. Their income went up 5,000, but we were only able to cut their tax bill that they're going to owe projected in half because they didn't change their withholding far enough. They only kind of rolled back halfway. So
You say roll back halfway instead of claiming 3, you want, they claim 1 maybe?
well, they went from married 3 down to married 1, and really they needed to do either probably down to single 1 or single 0 because she's getting a pension early, and there's just not enough withholding taken out.
So then
So they're going to owe at the end of the year again, but their income went up, they had more in their pocket, but at least we've chipped away at it. But I had to say,
Now,
you ready?
and do they get hit with that withhold penalty or whatever when you
Yep.
don't withhold?
If it goes over $1,000 that they owe on the 1040, the federal, they'll get a little penalty there because they didn't pay it timely. That's what the IRS likes to say, that you did not pay it timely. Okay. All right.
how much can you owe before that happens?
1,000.
1,000, so
Yeah.
anything under 1,000 of what?
They figure.
Because-
Yep. Yep, that's where they figure it's close enough. The state is about 500 because they will do the same thing. They'll put a penalty in there for not getting it timely. That's where they want you to pay estimated because they want their money throughout the year. Okay. All right. Okay, so let's do this. Let's take 5 minutes and then we're going to hit chapter 7.
What do you get for the state on that?
State, I got 683. Okay.
See, I didn't have to do it F9, that's
All
fine
right.
as well.
And the other night, did you get a chance to write down the answers for the early problems through this problem? Okay.
For which problem? This one?
No, the ones through,
Oh, wait, in the other chapter,
yep, chapters basically 3 through 6. Did you get a chance to
No.
write those down? Okay.
you only gave me chapter 5.
Okay. Yeah, I didn't know the other night. I'd set it over there and I think I forgot to say something to
I
you.
don't remember you giving it to
So.
me. I mean,
All right, so we are on chapter 7 now, okay? So we are moving in, and this is just a continuation of where we were at. As we were just looking there when we looked on the problem, we're in that section on the 1040 that are all those credits that would eat up our tax bill, okay? These are not the ones that go down with the payments that are refundable. We did those already, but these are more of the non-refundable credits, okay? Not many things we're going to cover in this one. It looks like there's a lot. When you're reading them, you're probably like, holy cow, okay? But as page 7.3 says, we got our objectives there. And our objectives are to talk about the retirement savings contribution credit, okay? We've talked about that a little bit. Child tax credit, again, we just saw that in the problem that we did. A portion of it is non-refundable, and then some of it is on the additional child tax credit is refundable. So if we eat up our tax bill, okay. The residential energy credit, this is the credit of 9 lives, okay. Seems like every year it disappears or is said that it's going to disappear, and it always comes back. And all I can think of is it's got some great lobbyists behind it, all right. So, this is something that we'll see about, maybe putting a new furnace in or something like that. And all I can picture is the state of Indiana, with our vice presidents there now, that everybody there that's making furnaces probably says, wait a second, nobody's going to buy furnaces unless we have this credit. Okay, we'll put it back in. Or, shingles or something like that. Yep, all those guys, the window guys, all the construction, things like that. We're going to talk about the adoption credit, credit for elderly or disabled. The last two, alternative motor vehicle credit, and plug-in electric drive motor vehicle credit, okay? That is the extent of our discussion on those two, all right? Do either one of you have a Volt or anything you plug in? Okay. All right, so that's basically, as you see on the top of 5.8, we were talking about that section where these go in, that non-refundable credit section. You can see they're right there in the line. So we're kind of doing the second half of that section, all right? It's on page 2 of the 1040. It'll be on schedule, let me see here, check my notes for 18, see where these are gonna end up. On the 2018 tax return, you will do all these credits on schedule 3, okay? All right, oddly enough, a lot of the lines end up the same numbers, but it won't be on the 1040, it'll be on its own separate postcard. Okay, so we are doing a new postcard today for 2018. So I guess you could say our workbook, each chapter is a postcard. That's really all you're going to need is just a postcard to do each chapter in the workbook.
So if I take my old thing, because I like just to refer to this,
Yep.
I cut it up and make
Little,
4
yeah,
or 5 little things
Yep,
out of it.
yep.
It's about what
yep, little kindergarten arts and crafts. Get your glue stick out and stick it on a piece of postcard. You're all set. You got your form for your 18. So, all right, okay. Retirement savings contribution credit. Our politicians, great. We're going to file on a postcard. So, all right, and with the changes in the law, it is not going to be an easy year filing. It's I have a feeling we're going to be very busy. So, this is a retirement savings credit that is a non-refundable credit for low income, all right, and who make contributions to an IRA or a Roth or employer-sponsored retirement plan, okay? Maximum credit is $1,000. This is that little thing we've seen on the W-2 you guys are always asking me, and we're going to talk about here in when we do the retirement section, which is chapter 9, okay, a couple classes away. But this is that thing where it says 414H SUB.
Yeah.
It's red, and then at the right, the box is checked, okay? That's a New York State consideration that we'll talk about when we do retirement things, okay? That for right now, I've just had you take it out, but we'll talk about it when we do retirement. But it is the saver's credit, okay? And basically, when you make contributions. Where I see this come into play sometimes is with individuals that might have a little bit of a tax liability. Their income is such that we have a little bit extra, and in order to get rid of their tax liability, we're going to open a traditional IRA and have them put money into it to not pay taxes. Plus, it may trigger this credit, okay? So, if they owe $1,000, we might say, can we put $2,000 in there? You say, I don't know if I'm going to afford it. And like, well, the $2,000 isn't really what's coming out of your pocket, because we might have a credit for the retirement savings credit. We're going to lower your tax bill. So that $2,000 might only cost you $1,200 to put in there because of what you're getting back on your tax return. So then it becomes much more affordable for somebody. So it is a credit, but like it says there, you know, the income is usually lower income just because you contribute to retirement through your employer. If your income is, you know, middle income type person, you're probably not going to qualify for this credit. Okay? You okay?
Yeah.
Okay. All right. Okay. So still choked up over the bills from last night, huh?
I got over that.
Okay.
Recurring, you know.
Okay. It didn't sleep well. A lot of nightmares last night. So, all right. You know, it'd be an interesting stat to see. I think we have thrown more touchdowns to the opposition than we have touchdowns to our receivers. So, because the number of pick sixes we have. Yeah.
So they can throw one.
I'm beginning to think, you know, maybe we need to do a colorblind test. Maybe they don't know which color uniform they're supposed to be throwing it to. So, all right. I don't know if that's a screening, but here it says who can take the credit at the bottom of 7.5. The retirement savings contribution credit is not available if either of the following applies. You can see the income threshold's pretty low, okay? Pretty low, all right? Especially when you're talking about 2 incomes, married, filing joint, that means each person's making $31,000 if you divide that by 2, all right? Which actually is, if you have the new minimum wage in New York State, which is going to be about $15 an hour. That's about $32,000 a year. So the person who made the qualifying contribution was born after January 1st. They can't do it. It depended on somebody else's, and was a student. So there again, see why we keep having that little bullet in our workbook? You know, if somebody qualifies for this credit because we have lower income or they meet these criteria, if they're a student, then they do not get to take this, okay?
Or after 2000, so 17, 18-year-olds can't do it.
Mhm.
They're basically saying.
Yep. And like I said, I use this credit quite a bit too, to help people out when there's, they're just over a threshold for certain health insurance, okay? Because if I can have them put money into it, it lowers their health insurance, lowers their tax bill, keeps a lot of money in their pocket instead of it going out the door to an insurance company never to be seen again, okay?
Now, is this, when I was working, I had a 401k. If I met the income requirements on the, then you still could get a credit besides reducing your taxable income, then you could still
Qualify for this credit?
get a credit, right?
Mhm,
Even if it's 401.
I think the one problem we did, they both had a D code in their box 12. And with that D code, that showed their contributions to their retirement. It lowered their taxable income in box 1 of the W-2, plus it triggered the 8880 for them to have a credit. So again, it's kind of a double win, okay? It's probably one of the few legal times to double dip, okay?
That's what it seemed like.
Okay, yeah, you were worried about double dipping?
Yeah.
Yeah, Jim didn't want to be in the running for the ice cream scoop at the end, did he? So I do engrave it for you. Okay. All right, so we have it. Usually I have, my wife loves to go to Pampered Chef parties, so we usually have extra ice cream scoops laying around since they always give them away at the Pampered Chef. So, all right. Child tax credit. So we're on page 7-8, okay? Mariana brought up, she says, hey, I saw my 8812 on my tree on the left, had a blue check. I didn't know if I did it or not. Well, you know, when you have kids that are qualifying, that they're under the age of 17, that form is going to be in there so that we have that $1,000 credit. As I said, for 2018, that credit goes to $2,000, but only $1,400 is refundable. Okay, so it's not like 17 where $1,000 credit with $1,000 refundable if you don't use it up at top. In 2018, it's not going to be totally refundable if you don't use it.
Only
Okay.
1,400?
Only 1,400 would be refundable. Okay. Talks about the qualifying child, the 7 test for child tax credit. Obviously, there's a relationship test. There is an age test. Again, I kind of went through those ages to kind of keep in mind. 13, child credit. 17, or excuse me, dependent care credit. 17, the child tax credit. 19, EIC. 24, EIC. And no age limit if they're disabled or permanently or totally disabled. Okay, so those are kind of ages to keep. Did you get those?
No.
Okay, so if we think about ages of a qualifying child, okay, and this kind of keeps the credits separate and straight. If they're under 13, that means they're qualifying for the child dependent care, you know, the daycare credit, okay? If they're under 17, they have the child tax credit, all right? If they're under 19, that's one of the ones for the EIC, but they can also be under 24 if they're in college for the EIC. And then they can qualify for the EIC, but they have to be proven to be totally and permanently disabled. Okay?
One under 13 is which one?
That's a daycare credit. Yep, the 2441 that we did. Yep. Okay, so those are kind of those age thresholds, and it's always a good thing when you're doing a return or you're looking at that first main info page. Yeah, kind of triggers. I got an 11-year-old. Whoop, I got to think dependent care. I got to think they're going to get the child tax credit if they can claim them on the return. And are they, yep, or are they eligible for the IC? Is their income low enough? So it kind of, you know, that cue. And again, all 3 of those boxes are where? Right after their name on that main info sheet. DC is dependent care, CTC is child tax credit, and EIC is earned income credit. So they're right there, and if they're checking them, then if they're all 3 checked, chances are your tree on the left is going to light up, okay? Talks about not providing their own support. Obviously, there's a residence test if they lived with them for more than half the year. They have to be a dependent on the taxpayer's return. Remember, we talked about somebody releasing the dependent to somebody else, okay? So that's where this one comes into play. So I may be the custodial parent, but I am allowing the other parent to claim the child for the child tax credit, okay? So I'm showing them as a dependent on my return that does not live with me. So I can't get the EIC, but I could still get the child tax credit and the exemption for that child, okay? And then obviously in 2018, that's going to be a big thing because now all of a sudden, instead of passing 1,000 around, you're passing 2,000 around, okay? So, all right. And it talks about citizenship, all right? And there's a little bullet there on top of 7.9 that says an adopted child is always treated as a taxpayer's own child, okay? Equally with the foster kids, all right? If, they're foster parents and they have them for more than half the year, when you looked at your options on the main info and there's a pull down on there, okay? They could be on that return, all right? Okay. As I talked about, you go midway down there on page 7.9, has some of the phase outs. The income phase out for the married filing joint, single head household, married filing separate. Again, those are 17. 18, those numbers skyrocket, okay? Married filing joint, we're probably talking 400,000. So that puts a whole bunch of people back in the game for the child tax credit, okay? All right. Okay. Great little chart there on page 710. A little flow chart. And like I said, these are always good to understand how they work because they help you with the interview skills because you kind of know what questions do I ask, and as soon as I hear the wrong answer, then I can move on and say you're not eligible for this credit. And then you know why. Okay? All right. Okay. A little homework there. You got to regurgitate the 7 tests and do some of the, on 7, 13, and 14, do some of the calculations with which Marianne loves. She loves to do those paper forms. She's
Now,
old.
the publication is 972 on 711. That publication and the worksheet and all that, is that for this also or just for the adopted child? See how it says figure out the credit? Now, publication 972.
And what is that publication?
Well, it says for the child tax credit worksheet.
Yep.
Covered with the adoption.
Yeah. Yep. Okay. All right. Okay, so that's the child tax credit. And again, we've already talked about the additional, but we just have to do, when we do the worksheets, to realize that there is with the 8812, that there is a refundable portion should they not need it to eat up their tax bill. Okay.
We're doing that for the child tax credit or the adoption. We're doing the same forms?
No, we're going to see the adoption one is different. But you can have for the child credit, you can get the child credit if you have an adopted child is considered the same. Okay, and sometimes with the foster kids, the same thing. It probably won't matter for 2018 because of the higher standard deduction, but if you do somebody for 17 and back, and some point I got on a chat room for adopted parents, and now I get a ton of them on Facebook, because when you are a foster parent, you get a stipend, okay? And actually, anything that you spend on that child to be in your home that is over that can be a charitable contribution on your itemized, okay? Because you're basically, for the better of society, that you're making a contribution. And a lot of people don't realize that, and they have 2 or 3 kids, and what they're getting from the state, it's just not enough. So, depending, especially if there's some special needs situations. So
That's only if you itemize.
only if you itemize, yes. And then obviously
More difficult.
in 2018, yeah. So that's going to be a tough one. So that's, again, there's one of those things that sometimes people don't realize the impact of the law. Whereas people, and not that they're being a foster parent just for the refund, but the benefit to the household, that kind of hinders it a little bit. Okay. All right, so we have the residential energy credit. So we're on the top of page 721. Again, if you want to write, buy it, the credit of 9 lives, okay? This thing, and this used to be the credit that everybody loved, and the advertisers for the furnaces still love to say this. You know, have us install a brand new furnace for you and you get a big credit on your tax return. Or the one that I think it's almost predatory, and I wish somebody would catch up with them, is the people that are selling solar panels. You know, they act like, hey, this is a great credit. You're going to save up to so many thousands of dollars on your tax return. Well, that's great, but on a couple instances, we've had guys come in and then get upset with us because they think we did their return wrong because the salesman told them, hey, he said I was going to get $2,000 off for a credit on my tax return. Yes, but it is a non-refundable credit. You are retired and have no taxable income.
So, thanks to the, yeah.
Yeah.
Solar panel salesman thanks you.
Yeah, exactly. You know, but yeah, so, and this credit too used to be a great credit, like I said, on the furnaces. It shrank to almost nothing. You know, it wasn't that many years ago that you got $1,500 credit for a furnace. Well, that same credit now is like $150. And it is a credit, as we'll talk about here in a second, that has a lifetime limit. It's not a yearly limit, it is a lifetime limit, okay? All right, so we talk about the credits here. Okay, we talk about here, there's the one with the solar and the wind and the geothermal. Actually, I was told one time, and obviously the sun's out today, but that this little peninsula up here by Lockport, they love to put solar farms in because it actually has greater percentage of sunlight and sun rays than some places in Florida. Now, I have trouble believing that, considering when I hear the forecast for Buffalo and the number of overcast, cloudy days we have being on the lake. But I had heard one time that somebody had said that we have more sun than places in Florida.
Probably some places in Florida. I mean, you know, I mean, it might be the teeny spot up on the panhandle or something. But, because I live, a lot of times, I live, you know, out this way. So, south, just a little ways south, there'll be the Lake Erie effect. It'll still be clear because everything's going this way.
Yeah.
It might be.
But yeah, so they said this is an ideal area up here. This is where you see these solar farms. So the energy credit, like I said, solar, wind, energy, geothermal. You know, I guess if you want to really make your neighbors mad, and you put one of those huge wind turbines in your backyard to power your house. So, but I'd heard they pay pretty good for the rights down in the southern tier, like towards Varysburg and Warsaw and stuff, that they'll pay you, you know, tens of thousands of dollars to have the right to put a wind turbine on your property at a later date. Okay. All right, and again, this credit is based on a refundable credit. As you can see there at the top of 722, talks about the taxpayer may be able to take a credit equal to the sum of 10% of the amount paid or incurred for qualified energy efficient improvements installed during 2017. Okay, which sounds great, but again, yeah, but again, we have to have what? Yeah. Yep, exactly. Okay. That next section talks about the credit is limited as follows. A total combined credit limit of $500 for all tax years after 2005. So you have to do a little due diligence here, because especially if you have somebody that's a new client and they're saying, hey, I put a furnace in, well, have you used this credit? So if they use this credit and got $500 sometime between the current filing and 2005, they don't get it. So again, you know, we're starting to narrow down, and that this credit, I can't believe, keeps coming back because it's most everybody's used it. The credit can be for $50 for any advanced main air circulating fan, $150 for that furnace or hot water, or $300 for any item of energy efficient building property. Well, everybody always comes in with their, hey, I put architectural grade or a steel roof shingles on my house. That's a capital improvement. Do I get to deduct what I paid? No, we don't get a dollar for dollar credit. We might get a little $300 credit is if you have not used it. Okay, so that's where that credit comes in. It's not a dollar for dollar. And again, a lot of times, I mean, I'm not saying that all people that do roofs and furnaces are snake oil salesmen, but you know, they do sometimes kind of not, you know, I guess they must put an asterisk and put a little small print down at the bottom. So it's like those coupons you get that you go in and pick up your food, and I'm not bitter.
We get the credit every year until it hits 500.
Mhm.
So if it was 150 in 2015, I can do it again for 2016, 2017.
If, yep, but once you've reached $500 for your total credits that you've gotten from 2005 to the current filing, you're done.
Oh, okay.
So, all right. Okay, and it talks about some other things there that kind of towards the bottom of 722 does talk about insulation material, exterior windows and skylights, exterior doors, okay? Just because they're upgrading from their thin construction doors to some very nice 6 panels on the interior, that does not make the house more energy efficient. I've had people explain to me, well, I did that so that I could close off the room and not heat it, and it makes it more energy efficient. No, you can't do that. What's that?
That was a good thought process.
That, yes, they were creative. So, all right. I did not give them the credit just for creativity. They have to still meet the law. Okay. There is not a creativity. Well, I take that back. Let me look at the 2018 return here.
That craft one, great.
Okay. Let's see here. There is a line 52 that says reserved on the 2018. It may be the creativity credit. That if you're very creative, they'll give you a small credit on your 2018. So we don't know yet, but there is a possibility. Okay. All right. There's a line for it at least. Okay. 5695, again, residential energy credit. Our software, if they are a carry forward client, will have a little table that will show if they've received the credits for any time going back. Okay. So we are able, for those people that have been clients for ours for a long time, that the software will carry forward onto the 5695 to see if they have used that 500. So it's not something that you have to see or check with them if they're a returning client. But like I said, if they're a new client, you got to kind of do your due diligence. Have you ever taken this credit before? All right. So, okay. All right. So that's the extent of the energy credit. Top of 725, we have the adoption credit. All right. And this is for those families that say to me, their income went up and our children now are, you know, of college age or they're graduated. We're not getting the deductions like we used to. And I said, why don't you adopt? There's a very nice credit. As we can see here, an income exclusion of up to $13,570 per child is available for the adoption credit, okay? Which, you know, then their next question is, am I supposed to be able to raise the kid forever for $13,750? Couldn't do it on my own kids, much less when I adopted, okay? But it is a very nice credit, and obviously it's very beneficial because for those kids that are out there that their life and situations have not allowed them to be able to have a home or whatever it may be. So
Just a question on this. If my daughter's brother-in-law and wife, they went through, began the adoption process and paid money, and then turned out she got pregnant, and so they stopped it. Even if it, would that be what they paid to start to begin the process for adoption, be, even though they never ended up adopting, it'd still be?
yeah, when you're reading it, you're kind of reading that about taking the credit in a year prior, that even if the Adoption's not finalized? Yes. Yep. So, but yeah, there are that, you know, those credits that sometimes like that one that you have that can be, you know, taken in a year prior or sometimes carried forward. And it's also.
Is that something you could amend and go back? If
Yep.
you.
Mm-hmm. Yep. As it talks about there, bottom of 725, the adoption credit of up to $13,570 per child is available. The credit is non-refundable, which means it is limited to reducing the tax year's liability. However, any excess credit may be carried forward for 5 years. Okay, so that's a very important thing, because this is a non-refundable credit that just because you didn't get to use it doesn't mean you lose it. You can carry forward. Okay, and I do, you know, again, you know, the little whatever the group or whatever they call that on Facebook that had them start coming into, each situation I'd explain to them is different, you know, because they were thinking, well, our friends at the adoption support group said that they got this. Well, because their return worked a little bit differently. Okay, so you can kind of see how the different credit, and especially when you start talking about a carry forward, you got a great thing going on. Okay, all right. Qualified adoption expenses, at the top of 726. Qualified adoption expenses include adoption fees, attorney fees, court cost, traveling expenses, including meals and lodging while away from home, and readoption expenses relating to adopting of a foreign child. So sometimes it's a case when they may go to Central America to adopt a child, and maybe the adoption happened there, but it's not recognized in the United States. They might have to readopt, okay? Or the travel to go down there, and sometimes, you know, you hear it sometimes about Eastern European countries, they have to go there and pick the child up and come back. You know, those travel expenses to get the child, those would be deductible, okay? So they would, what could make up that credit, that $13,750. Qualified adoption expenses don't include funds that were received from any state, local, or federal program. Sometimes difficult to place kids, special needs, there's a subsidy or credit that they get on that, okay?
So you take that as income?
No. Yeah. They violate state or federal law for carrying out a surrogate parenting arrangement for the adoption of a spouse's child. Obviously, somebody must have attempted this, okay? Got married and said, I'm going to adopt the, you know, child of my new spouse that is not mine biologically. I'll adopt him and get the credit on my return. That, you know, when you say it out loud, it doesn't make much sense, does it? Sounds like a good idea at first, but it doesn't sound real great, okay? Reimbursed by the employer. Again, some employers, I think Geico does it. I know that Wendy's does it. They have very good programs because there must be somebody in their executives that is an adopted child and says, you know, I want my employees to have this so that they will give them a benefit. And then obviously that's tax-free dollars because it's probably exclusions from their taxable income. Okay.
Yeah, I think the Dave's comments from Wendy's was adopted.
Yep. Mm-hmm. Yep. So, and again, you know, no surrogate. And if you are fed up with the regular adoption system and you go to the black market, you do not get to take the credit for anything that you did that would be violating a state or federal law. Okay. All right. And this credit, it's better to kind of see it in action. So we'll kind of do some things when we get into the returns there to kind of follow along. Sometimes it's a little tough to read with the credits and things like that. All right. Okay. The one thing I will say is that even if you've paid something, if you go to page 729, okay, talks about special needs children. Adoption of U.S. children that a state has determined to have special needs. And that may be determined by the state or the county, okay? It's not necessarily, you know, those laws tend to come in there. So, all right. Okay. Basically what it's saying is that if you have a child, the adoption of a child whom the state has determined has special needs in 2007, the maximum credit allowable generally would be $13,570. However, the maximum amount will be reduced by any qualified adoption expenses claimed for the same child in prior years or years. And the thing, basically what it's saying, you're going to get $13,750 for a special needs child no matter what, unless you've taken some of the credit in a previous year. Special needs doesn't necessarily define as what you think it would be. Okay, there are instances where ethnic origin, siblings. So if we have twins that maybe are hard to place, I have seen where they become special needs. Or you have a family of 2 or 3 kids that they do not want to separate because of their previous home situation, they become special needs. It's not just because they might have a physical or learning disability, but those become special needs, and I have seen the county deem that for the credit.
So you can get for both of them then.
Exactly. Mm-hmm. Yeah, Chris Fabian always tells the story when he talks about the adoption credit. He had some lady that he ended up coming in and discovered that, she had been a foster parent, was adopting the kids, and, a couple of them sometimes in the years, and whoever was doing her returns had not done the tax credit right because of special needs. I forget how many tens of thousands of dollars he found her amending 3 years back.
Yes.
So, it was a windfall for her because obviously, she was not obviously in it for the money. She just had the goodness of her heart that she just wanted to make these kids' lives better. But, again, for us to be able to put extra money in her pocket to do maybe some extra things for some of those kids. And, when you talk about $20,000, $30,000 of found money, if it means that, she can start some little college funds for some of those kids or whatever, so be it.
Claim that on the next year's taxes of any type of income because of that.
Nope, it was a credit. Yep, it was credit. So, okay. All right. Okay, so we had that, talks about some things about filing status and adaptable. And again, when we get into the form, we'll talk about it. At the bottom of 731, you can see there in box 12, the T code. So if the income, if you look it up above for Steve Maple, his box 1 is 135,000, but his box 5 is what? 145, because why? He got $10,000 of tax-free money from his employer. Okay? But why is box 3 only 118,500?
They must have got something else taken off of the adoption.
Or what else?
Retirement?
No.
He's over the maximum Social Security.
Yeah. Yep. And that should actually read what?
What number is that? 127?
Yeah.
Oh, I thought it was higher than that.
See, I was seeing, baby guys. See, Jim was paying attention. You caught that one, even though he was up all night for the Bills game. So, all right. But yeah, so basically the reason it's lower is because, on Social Security wages, there's that limitation. And what would that 78, what is it, 78, 86 or whatever, the 6.2%? Remember the limitation when we talked about you go get it for excess Social Security withheld? So,
Right.
Okay.
So for 3, you hit the limit and then you take the 10,000 off of that?
No.
No, you stop at that.
Yeah, just stop at that limit. Yep. Yep. But the 145 to 135, that's where the difference is in there. Okay. The 10,000 is because of that code T. All right. The 8839 is the form that we use for the adoption credit. All right. And again, I like to show it in the software a little bit so you can kind of see how things move around in it. But they do give you some examples of how that's filled out and where those numbers come from, and then how it gets onto the return. Okay. All right. Okay. Had one last year. It was interesting too because a family that was a foster family kept visiting with them the adoption credit, and they're like, well, we can't file joint because the one spouse was in a program for student loans. All right. Well, they went home and did the math, And what we gained that year for the adoption credit, because they adopted one of the foster kids they had, was greater than what they were losing by not doing the income reduction on their student loans. So they went in a year and did a joint return because it meant more money in the household. And then the following year, they were going to go back and do a, because it ended up being a situation, again, where we were able to calculate that the net gains of the household was greater on the credit than what they were losing on the reduction of their student loan payments. And it was, you know, it was a couple $1,000s, but for their household, it was a couple $1,000s. So I kept $2,000 in their pocket that year.
And then, so the next year you can go back?
As long as they could go back, yep, they said they could. Whatever they were doing with their student loan stuff, they could for the repayment. So their payments would then, for the next year, were recalculated.
So it didn't screw up their...
No, but obviously they had higher payments for that year.
Yeah, but the following year...
Yep, they talked to their student. I said, you know, I don't do student loans. Talk to them and make sure that it would work. So, all right. And they were two pretty close to the end, so it wasn't going to hurt them either. Yeah, so it just, and again, I'm not saying every situation, but they just had the perfect storm that it just worked out that way. Okay?
Are these figures going to change 2018?
No,
Phase out?
no.
Something didn't change.
So far, yep. Okay. All right. So we have that with the adoption credit. Okay, and like I said, we'll do some more of those. There's some problems for you to work out. Mary Ann's favorite, doing the forms by hand. Okay. We should have you writing the software, Mary Ann, if you like to do the forms that much. All right. And, okay. All right, so we're on page 758. Okay, this is the credit for the elderly or disabled. So at the top of 758, again, this is kind of like that first credit that we went through, that savers credit or that retirement contributions credit. Has to be the perfect storm. All right. When you read this, what's one of the first things that it comes in? The credits for elderly or disabled is a non-refundable credit available to taxpayers who are either 65 or older or retired on permanent disability and have taxable disability income. The credit is limited to the tax due. All right. And again, this one you don't see often, Schedule R, because if their income's low, they're not going to have taxable income and they're not going to need the credit to eat up their tax bill. All right. Okay. It says a qualified individual there in the middle of the page. They're 65 or older. Okay. But when you read the flow chart there in the middle of page 759, you kind of realize that, again, this is one of those credits that is pretty narrow. And if you look at 760, okay, it talks about income limits. To determine if the taxpayer can claim the credit, 2 income limits must be considered. The first is the amount of adjusted gross income. The second limit is the amount of non-taxable Social Security and other non-taxable pensions, annuities, so and so. So if you look at that chart, for a single person, all right, they qualify. You can't take the credit if your adjusted gross income is equal or more than $17,500. Okay? 16,000, was it 16,112? I think is poverty level right now, is what the government's number for poverty is. So when you start looking at 17,500, it's not a lot of income. Okay? All right. Like I said, you don't see this credit very often. It's you know, because when you start thinking somebody around 17,500, you think they're even going to have taxable income? No, no. And it's a non-refundable credit, so it's not going to help them unless they have a tax bill. All right. Then at the top of 763, alternative motor vehicle credit. How many of you guys understood this one?
Good.
Okay. The only thing I want you to know is to qualify for it, the vehicle must have at least 4 wheels. Okay, that's the extent of that one. All right. Plug-in electric drive motor credit. Again, I've never done one of these, to be honest with you. I've never had anybody come. I helped somebody that got a letter that somebody else had done the return, and it made sense to me when I did it to help them on the letter. But this and the solar panels, this is an industry that bothers me because it's supported on both sides by the government. The individual that buys the electric car gets a credit, and the company that is producing the electric car to make them affordable for people gets a credit. So
Why don't you see more of it? More people are getting electric vehicles.
you just don't see a lot of it. Yeah. So
So is my golf, if I'm retired and have a golf cart that I drive around?
no,
It's
no.
not, is it?
Your electric golf cart, yes, in Florida.
Yeah.
You can try. Qualified plug-in electric drive motor vehicles. This is a new vehicle with at least 4 wheels that is propelled to a significant extent by an electric motor. And then the second one has a gross vehicle weight of less than 14,000 pounds. So your golf cart might, but I'd have to have you prove to me that the electricity from a battery that has a capacity of not less than 4 kilowatt hours. So you're gonna have to prove that one to me on your golf cart. Because if I'm imagine if your golf cart is greater than that, your golf cart probably is going faster than it's rated for whatever you're doing with it. So, all right. Okay.
Try them.
Yeah, you can try. Let me know how that works out for you. I'll help you with the letter you get from the IRS. So,
Be very creative.
yes, that's that creative credit again. What did I say that? Schedule.
Yeah.
Schedule, we'll give you credit on Schedule 3, line 52, the creativity credit on that one. It says reserved. Reserved for Jim, it'll say right there. It's like a parking spot. Okay, so that's Chapter 7. What I want you to do is, let's see here. Why don't you start putting in problem 7.3, Jimmy and Susan Randall, okay? So 7.3 on page 711 of your workbook. As it talks about on their points there, they did a 1040A, their joint, talks about their refund. They're not students, but if you get down to the third to last, and the second to last, they had some childcare expenses, and they also adopted Tammy, and they had $10,800 in adoption expenses. 7.3, it's on page 711 in the workbook.
So if they did 1048 last year, that's not, that means they didn't do
How are we starting to do on the main info? You feel like you can do these in your sleep now?
almost, except for this adopted one. We want to put in the relationship.
Well, what did we determine? What did it say in that one paragraph in the textbook about an adopted child?
It's as if it was your own child.
Exactly.
I think that they would want to put adopted if it was in that year only. So that this way it would trigger all the forms.
You mean on the main info there?
Yeah. Just being on the first year.
Yeah, I mean, the adoption credit doesn't happen as often as the credits that are there. You know, and obviously for room and things like that, but that's definitely one of those things that you have to ask about. Okay, so we're getting everything in there. And sometimes adoptions will jump out at you if a couple of the kids are less than 9 months of age difference. Residents in New York, file. Again, they're banking at M&T. Should get some type of kickback from M&T that all the advertising we're giving them.
Sure.
They did not have anything as far as we talked about driver's license. Okay. All right. How are we doing on the main info? We just about there?
Sure.
Okay. Back on our bullet points, it talked about Jimmy and Susan filed a 1040A. I know Mariana said something about that, but that indicates on 1040 page 1, what are we answering in the middle there? Did they itemize last year on a 1040A? No. Okay.
Wait, where are you now? You're already on a 1040 page 1?
Yep, in that middle section there. Okay, I'm back on the bullet points. We'll come back to the adoption, stuff like that. Okay. We got everything else pretty much in there. What we're going to do is we'll go ahead and put the W-2s in.
Okay, now you say it already automatically comes up W-2s on here.
Yep. Do you see a W-2 blank one on the left on the tree?
No, I don't. It could be my house. Okay. Miscellaneous forms, I get them. And they don't. So I've never had a W-2 that came up. So I always do my MS form.
Okay. Not sure if that's, usually it always comes up with at least one W-2.
You know, and then, yeah, and I click on it, and it's already got the first guy taxpayers.
Yeah, it's usually always one there, so.
Okay. But mine doesn't, but then I do copy that W-2 for the second round.
For change this morning, it's kind of interesting. I got I just dropped it and lost it. When I stopped for my coffee, they gave me a Indian Head Buffalo nickel, 1928.
Oh, wow. That's kind of neat.
Yeah, so I'll have to see if it's worth anything. I will claim, Jim, I will claim the income if I sell it, so that if it's,
You don't have this coins.
okay. Now, Jim was, I could tell his wheels were turning, thinking, does he have to claim that?
Which I never understand that. You can make money on coins, but you don't have to claim them.
$35.34, so he works at Continental Computers, Main Street. All right.
So if I hit the copy tab, to copy the first one, then when I go back and change the social security number, it'll change the name and everything.
So you mean I copy the W-2?
Yeah.
So if you do hit copy, it'll bring it up, and then all you have to do is check at the top. Yep, and it should change the name and social. Did it for you? Okay. Like I said, for me, that seems to be the most efficient way to do it. Kind of skips you getting too much navigation going on. And like I said, you check the one box, you kind of sometimes get in the habit, but make sure that you're double checking the addresses on the W-2s, that it matches what's on the screen there for them. Some Equipment Incorporated. Ooh, we're getting political now. It's on Russian Avenue. Okay. Federal tax withheld. All right. Okay. All right. Okay. And the W-2s in there. We have one other tax document. Is everybody good on the W-2s? Okay.
I'll make sure nothing else.
Okay. And then on page 714 is that last document. Before we go back to the bullet about the adoption, we have Humpty Dumpty Daycare. So on your tree on the left, you should probably see 2441 lit up. If not, go back to your main info page and make sure you check the DC column after their name, okay? For dependent care. The 2441, we got on page 714 in the workbook, they have a Humpty Dumpty Daycare and that credit for child and dependent care expenses. All right, yep. So, and again, with the age when we typed them in, that would be a question on that. We do have the EIN number for our Humpty Dumpty. Okay. Yeah, this one you don't do a dash. It'll bing at you.
Yeah, I finally want to do it again.
Okay. And the last thing we're going to do is go back to our bullet points on 7-11. So let me know when everybody's got their daycare in there.
So just page 1 of the child.
Yes. Yep. The 2441. Yep. Okay. All right. So let's go back in our workbook to 7-11. We had the child care pensions, healthcare wise. Yep. ACA. We can check those off. They all had health insurance. Okay. It meant the minimum essential coverage. All right, and then the last thing we're going to look at is that bullet that says Tammy was adopted by the Randalls in 2017. They incurred $10,800 in adoption expenses during the year. Okay, on either one of our W-2s, do we see anything in box 12?
Wait, which one are you on now?
Yeah.
No, there's nothing.
Oh.
Yes, there wasn't something about 1,200, 7,800.
Well, what was that for?
It was ED.
That's the healthcare one. So that shows that Continental Computers had health insurance for the family. So we
How do
don't.
we know that?
The DD code. In your workbook, there was a bottom there that had all the W-2 codes.
In our workbook.
Yep, way back in earned income.
Oh, back in the day. So,
Yep.
right. So
Or
we
your
just have
text.
our chart.
Yep.
We have our chart.
Yep.
Okay.
So, so you know on those, if it was a T code, what would that be? The adoption expenses.
The T code?
T code in box 12 stands for adoption. Yep. Yep. Okay. Not a 1098T, but a T code. Yep. Okay. So we didn't have anything. So, but we talked about on 7-11 there that we had adoption. Okay, for Tammy. Well, that form, there's really, like Marianne said, there's nothing on the main info that says that it jumps out. The adoption one?
Yeah, is it over on my tree?
Nope, that's over. We're gonna go find it, okay? So I want you to go to 1040, page 2. And what type of credit is the adoption credit? Non-refundable. So let's look at our non-refundable credits. Do we see anything there? So anywhere between line 48 and 56, do we see it?
Under other credits.
There you go. And how would I see if it is? I'm going to go over to the 0 and hit what?
Hit
Wait a minute.
F9.
Yep, there you go.
Wait, so wait, which line?
So we're on line 54 because we're basically know it's a refundable credit, but it's not listed. So I'm going to go line 54, go all the way to the right, light up the number.
0?
Yep, hit F9, and let's take a look in there.
Okay, so it's line 54.
Okay. All right. All right. And are you in there, Mary Ann?
No, I had it right down. See,
Okay.
where I never remember where my F9 is.
Okay.
Now, which form am I looking?
Well, let's read all of them. We got that elderly one we talked about. We got electric cars. We have,
Qualified adoption.
there you go. Okay, 8839. Yep. Okay. All right. Okay, so we're on our qualified adoption expenses. And this is the form you saw in the textbook. Okay. And who is our qualified adoption child? Tammy, right? So I'm going to put her in. And she was born in 2007. All right. We got a little thing we're doing in the hip. Was she born before 2000 and disabled? No. Is she special needs? No. Is she a foreign child? Nope. And what is her social? 455-58-7777. Okay, and did this,
Did it become final in 2017?
it says on the bullet point, the adoption by the Randalls, they occurred adoption expenses during the year. Does it say?
Yeah.
Yes, okay. So we're gonna check that. All right, and as we come down here, again, you know, the middle part, I guess if you're opening, if you're the middle one that's sort of red, if you're Daddy Warbucks and you need a second, third, and fourth adoption thing, because you can only fit 3 kids per an adoption thing, that's where you can do the multiple kids, okay? But down in part 2, the maximum credit, okay? It asks me, did you file the Form 8839 for prior year for the same child? We're going to say no, okay? And it shows our credit. Then we have qualified adoption expenses. All right, and what did we get? 10,800, right? Okay, so how much is our credit going to be?
10,800. What do you mean? For the smaller of the lines?
How small the lines it is, yes, but how much is the credit going to get?
Oh, they already figured out for us? We're talking about the 3,000?
Yep, scroll down a little.
723?
Well, 3,723, yeah, because you scroll down a little further. See these 2 sections?
Yeah.
Okay, all right.
That was correct, yeah.
So I'm going to use how much of my credit? $7,077, right?
And mine.
Yeah.
But what happens on 2018? The remainder of it? Yep. Okay. See on there?
I see that, but
So
I'm not
10H,
understanding.
the maximum.
So
No,
10,800
That was
is
all
what
we
they
had.
would use.
Yep.
So anything carried over is nothing. Edit that. Amount from line 5. But- Okay, so that's another form. Amount from line 5. Other credit worksheet. So we have to go in the worksheet to do that manually or just?
No, it does it on there. Okay. All right. Okay. So it's talking about, but again, it's one of those things, it's, think about where the number came from. Okay. It's a non-refundable credit. So the worksheet, what is the worksheet basically telling you?
That's all the taxes.
That's all the taxes.
Exactly.
Oh,
Yeah. So it's not that I had to go calculate that. It's a worksheet that's telling me that's what my tax was. Okay.
which means they can't go
So-
any more than the 7,000,
Exactly.
even though they hit 10,000.
Exactly. So if I go look, if you go look at your 1040 page 2, okay?
So I've been panicking all this time, and basically it's gonna calculate it for me.
If I look at my 1040 page 2 and I go to my refundable credit section, all right, our non-refundable credit section, I still see my dependent up there, but what disappeared that was there before? What do they have on the return?
Child tax credit.
Yeah, because that has a what component? A refundable. Exactly. So it pushed those down below because I could use this credit to wipe out my tax bill.
But the other one to get money back.
Exactly. Okay, so see how I did that, Jim, where it pushed it down? So if I go down a little farther, where
Like a king.
okay, it's like 3-card Monty. Where did it go? Okay,
So it goes down to line 67 there?
exactly. You see the 2,000 there. Yep. So all of a sudden, now they have a refund of $97.22. Yes. Okay. And again, you know, by no means is the adoption of that child and things that they paid and raising that child and loving that child, you know, obviously it's going to be way more than $13,750. But you know, you can see on the return the benefit. And like I said, I want you to understand too that it ate up the tax bill in excess of the dependent care credit, then pushed the refundable portion of it down below to our payments, and then we got that 2,000 there. So it benefited them a couple ways.
And then for next year, they still got some more to use?
Exactly. So that if you go back to your 8839 on page 1 on the left, probably says Tammy by it.
Anybody?
Yeah. 8839 form.
Yeah.
On the tree. You probably see, and you see Tammy. Yep. You go to that. In next year's return on that line, you know, if it was this one, it might say carry forward from 2017.
It automatically will
13.
come up doing it?
If they are a prior client, yes. If they are a new client, you got to go look at the form and make sure you might have to manually enter that stuff.
So, and that will come from their tax return from the prior year?
Yes,
We'll see that on their tax return?
Yep, as long as they have the form 8839. Again, you might have to ask, but that's where you need to know the way these forms sometimes work. Because if you're looking at a prior one, to make sure that you carried everything forward the way you should.
So
So-
if they're a new client and they adopted, and you have to check, see if they had their old.
Old return, or ask them, you know, did you take the adoption credit and did you get all of it, or is there some left over? The one thing I want to do, I'm going to do a little what if on this one. So I want you to go up to your tree, or excuse me, up to the file thing on the left above your tree and monitor, and hit the what if mode.
Hit file and what if?
Yep, what if mode.
Oh,
Okay. All right. So information about your eligible child up above. We come to find out Tammy is a special needs as deemed by Erie County. Okay. So I checked that box for special needs. Okay. Exactly. What amount can I put on there for qualified adoption expenses? Okay. But if I do the form, what do I know from what I learned about the law? What do they get?
13,500.
Exactly. So they're going to get the full amount.
What were you putting in?
Qualified adoption expenses.
Oh.
Because I know from the
So
law,
now we can change that and say, even though you only spent 10,000, you're gonna get the
Oh,
full
so-
13,000.
yep,
that's right, okay, it's not, yeah, it says 10A now, but you go in.
you go in and put 13,750 in there. Did it change the refund? Didn't. Why?
Because it's still just gonna carry it over. Because you
Exactly.
still only paid 7,000.
Yep.
Or owed 7,000, whatever.
So now if I go down to line 16 down at the bottom of the 8839 page 1,
But it'll carry more for the following year.
6493 is now carrying over. So they're getting that credit. So, okay. So basically they get this credit for 2 years. All right.
Sure.
Okay. See how that all worked? Okay. All right.
So
How
now
do
when
I
I,
get out of the what if?
yeah.
I mean, I don't wanna.
I don't want to screw up my real one.
Okay, so go back up to file. Go down to what if,
Undo it.
and then it's going to give you a little question in the box and wants you to confirm. If you want to keep it, you hit yes. If you don't want to keep it, I hit no. Things will kind of flash at you.
Oh, yeah, this is my flashing.
Okay, you're thinking, what did they just do? Delete my return?
Mhm.
And then we're back to the original return. Refund hasn't changed, but we can see that we picked that up, okay? All right. Another thing on this one, I'm gonna do, well, we'll let you figure out, because there's one with the energy credit, and I'll let you guys figure that
Oh,
one of the problems in the book, yep. So has an energy credit in it. Nope, we're not gonna do that one now, okay? But no, not gonna do it now. That'll be your homework, okay? All right. So that's that. Let's see here.
I got one of the red ones still, yeah.
I think since we didn't finish our forms.
A lot of the due diligence stuff on there.
Okay, I have a question.
Sure.
On my W-2
Mm-hmm.
for Susan, my red came up as, please verify the federal withholding, Social Security withholding, Medicare withholding. The amounts exceed
Yeah.
the publication guidelines.
Well, that's probably saying that they're not doing, their withholding seems out of line for their filing status. So sometimes those will pop up if their withholding doesn't meet the parameters. Because I checked it. I already checked it.
Can I just check it?
Mm-hmm.
Oh, okay, you just,
If you validate it on what's on there. But again, that would be a red light, I guess, caution for you to say, is their withholding being done correctly? Okay, because sometimes you'll get that light to light up if it doesn't meet the parameters for what withholding should be based on their filing status. Because when somebody does their withholding allowances, just because they're married doesn't mean they have to do married on their withholding certificate for the allowances. They could seal 0, or they could do, but if the program says, boy, this doesn't look like this tax is matching their income based on their filing status, it may ask you to double check it.
Do you get a lot like that when you ask, do you know what your filing status is over there, or how you did file? They'll say, I don't remember, I have no clue.
Yeah, because they've worked for a company for 20 years. They filled out the paperwork the first time they were hired and have never changed it.
Even the younger kids.
Yeah.
I asked them.
Well, and
said,
I
"How do you file it?"
went through this with my son over the weekend. He was over with his new job, and he goes, I don't know, I did the tables. And I go, I told you never do the tables on those, because the W-4 and things like that, they're like 4 to 8 pages long. And you get down with this table thing, you're going, oh, I'm an 11. I'm married 11. What are they not going to do? Not going to take any tax out of your paycheck, and you get to the end of the year, you're going to owe a whole bunch of money. I tell everybody when I do those things, I throw away pages 2 through 4 and say, we're just going to base it. Where do you want your refund? Do you want it in your paycheck, or you want it at the end of the year? And then I can tell them what number to put in. Okay. All right.
Can you ever do a negative one?
A negative one?
Yeah.
No.
no. Then I gotta fix.
-1? So they really take a lot out of you?
No.